weekly update and what to look forward for this week. Stay tuned. You really don't want to miss this one. Hey guys, in today's episode, I just want to talk over I kind of want to touch bases on last week and see everything that happened last week, and for what it's worth, how we can learn from it and move forward from it and see what's going to happen here in the week ahead and in the weeks ahead, because I feel like what's going on right now with all this, shorting stocks and GameStop and Nokia stock and all these BlackBerry stocks and all these stocks, I think it's kind of like taking a little bit of a toll on the whole market. I think there's been tremendous volatility in the market, and thus we've seen prices pretty much be all over the place. I think we all need to just take a step back and look at this, and I kind of want to discuss what people are talking about and how this can affect the market in the long term. I think we're at a point right here where I've been going on Twitter and I've been seeing different people talking about it and saying, wow, it's us against the hedge funds, it's us against the big dogs, it's us against them, and really it's not. In the market, everyone serves a purpose. Kind of like in business, everyone serves a purpose. There's the big dogs and there's everybody else. And in this situation, the big dogs are the hedge funds, the people with the big money. And I just don't want everybody to jump in here thinking it's going to be us against them, because it's really not. Everybody serves a purpose. And I think we need to be looking at this in a different way, where I understand people's anger towards the hedge funds, because for so long they've just been racking it in and making all that money and doing that. But at the same time, we need to take a step back, because this may lead to a bigger issue ahead. And in regards to AMC and GameStop, and all these other stocks that have been halted on these platforms, everybody talks about Robinhood, but at the same time, a lot of different platforms have been doing the same thing. It's not only Robinhood, it's TD Ameritrade, it's WEBULL, it's everybody. And if they're all doing it, it has to be for a certain reason. Now, why is it happening, or why are they putting limitations on these trades? It's actually pretty simple. The CEO of WEBULL came out saying that the clearinghouse basically gave the order to all these platforms to stop so much trading on these unique stocks here. I kind of want you to think about it like this. Kind of like when you put some money in a stock, right? Then you guys make a profit. So say, for example, you guys put in $100 in a stock and you guys made a $50 profit. Just an example. You guys go ahead and cash that out, right? And on Robinhood, you don't have a waiting period. You basically get that money and then you go ahead and turn around. And if you want to invest those 150, then you go ahead and pump it back into the market, and then you go ahead and make more money or lose money, right? So there is no waiting period. So just imagine millions and millions of people doing the same thing on the same stock. What happens when millions and millions of people are putting in 100? They make 150, they get that money out, so now they're $50 up, and they reinvest it. They wait for a dip, they reinvest it again, it pops back up. Now those 150 turn into $300. You cash out again, you get $300 now. You're waiting for a dip and you go ahead and put it back in, and now you've put $300, and those $300 turn into $600, and you're getting it back in the same day. Well, you're getting it back the same day. However, Robinhood has to wait for those funds to clear out. So I think, and not only Robinhood, I'm talking about everybody. I'm talking about WEBULL, I'm talking about everybody. So I think what's going to happen, and I think this can happen very easily, is that all these platforms could just stop saying, you know what, there is no margin accounts anymore. If you guys want to continue doing this, there's not going to be no margin accounts, and there's going to be a holding period for your funds to clear. Because I think by everybody mounting up on these institutions or on these stocks, then we're having this issue. And I think that that can actually lead to further problems in the market that I hope doesn't happen. And I think we all need to just take a step back and realize that there's other people's money out there too. Because every time you win, guys, somebody loses. Every time somebody loses, you win. So I'm trying to keep you guys on the right side of the market. I want to discuss this tweet that I seen, and I think it breaks it down very, very good. From Stockwing Alert. We will have a major liquidity issue if we continue duking out with Wall Street on AMC, GMC, etc. And I'm going to break this down real quick. Here it says, short squeeze stocks popular with retail investors were dealt a big blow this morning when a number of free trade-to-trade app-based brokerages, as well as a traditional brokers like E-Trade, Schwab, and Interactive Brokers halted trading activity in all those stocks. Okay, they're all doing it, guys. The reason comes down to normal, boring details of back office activities that most equity markets participants aren't aware of, let alone forced to consider regularly. After an equity trade, there are a 2-day settlement period. When you buy a stock on Monday, it doesn't actually settle versus the seller until Wednesday. So there's 2-day settlement period. Because the free of trade model typically signs users up for a margin account, regulatory requirements force them to put up cash via their clearing firm or directly in the case of larger brokerages that sell clear on the trade day to ensure that the settlement actually takes place 2 days later, reducing counterparty risk across the market. What's that telling you guys? We connect the dots, right? We're saying that usually there's a 2-day waiting period. So it doesn't allow you to grab that money and reinvest it right away. What people are doing right now is that they're grabbing their gains, they're reinvesting it into another one. They might jump from Nokia to BlackBerry, from BlackBerry to AMC, from AMC to another one. It just keeps going and going. Let's continue. Normally that's not a big deal. Firms understand they might have to come up with cash and don't have a problem doing so because it's part of normal operations. But the recent explosion of volume in names popular on the services means that funding requirements for a few stocks have suddenly soared. We're talking about AMC, we're talking about GME. Looking at just 5 of the meme stocks, we are talking figures into the mid-single digit billions, assuming relatively conservatively that only 5% of daily turnover is new exposure for free-to-trade brokerage customers. Now you're getting millions and millions of people all over the world investing. They're pumping it. What's going to happen, guys? They're going to eventually just put a stop to this, and it could end up bad. Here we go. Imagine having to go out and find a few $1 billion to borrow on a short notice, and knowing you'll have to find even more if you let your customers continue to take positions they seem desperate to take. Adding fuel to the fire, the Depository Trust and Clearing Corporation, which is a central settlement warehouse for the U.S. market, raised the collateral requirements for some of these most popular stocks, further ramping up the cost of funding and settlement procedure. Leaving aside the motivation of brokerages to protect customers, the difficulty and gap risk in executing orders in extremely volatile markets that have frequent stops and much more speculative theories about an inside cable bailing out hedge funds, the cost of funding settlements alone was ample reason for brokerages to restrict trading in these names. So we come to the conclusion they might just stop or restrict, the being able, they might just say, you know what, we're going to force everybody to wait out and settle 2 days if you want to invest in this stock. And I think that's the appropriate thing to do. Guys, I'm going to tell you something, and this is just my own personal opinion. There's always the big dogs and there's the smaller dogs. And I'm going to tell you something. The big dogs always win. They will eat the small dog up. Guys, let's not be greedy here. We're doing hella well in this market without this whole drama. I'm personally kind of already tired of it. But But let's think with our head. I'm not invested in GameStop. I'm not invested. I think I have one call on AMC that I purchased a while back that I'm still holding because I put out a 1 year call on that. I also bought Nokia on a 1 year call. Now I was buying Nokia for the simple reason that I thought it was a good company to look into, especially with the whole 5G, 6G thing coming up, and it was really cheap. But it did go up. I didn't sell my position because I think it has further. I think it can hit $10 this year. That's what I'm thinking. But guys, let's not be greedy here and let's not be dumb here. Let's play our positions correctly. Just protect your money, protect yourself. I did go to about 30% cash. I pulled out some cash out of the market just because there's so much volatility. There's so much moving pieces here. I don't know what's going to happen here. I don't like the way this is going, but however, I'm still in the market. But just be careful, guys. And with that, guys, I want to leave you off. I hope you enjoyed this video. I hope you got something useful. If you did, and if you want further plays, because we're touching all kinds of different plays, guys, on a daily basis. Latest information at Investing OG on Twitter. Follow us there, and you'll get the latest information. I know other people have started following us, and they've gotten good results. So with that, guys, I'm gonna let you guys go, and I'll see you on the next one.